Hello and welcome to Trade Maestro. Thank you for joining us. We know your time is valuable and we take that very seriously. Our presentation will begin shortly. While we wait, please take a moment to fully prepare for the presentation. First, make sure your audio is working. You should be hearing sound now. Also, please remove all distractions. The information we will be sharing is very important and we want to make sure you get as much out of it as possible. And finally, be sure to have a notepad and pen so that you can easily take notes and write down references that may be discussed. Thanks again for trusting Trade Maestro with your trading education. We will begin shortly. For thousands of years, if somebody wanted to learn a new skill, maybe learn to make boots or horse saddles, how did they learn that skill? They studied with a master. Trade Maestro builds on this tradition, the relationship between the mentor and the apprentice, but we do it all online. The term maestro means master or an artist of consummate skill. And that's what a trade maestro is. It's a person who has mastered the art of trading. I didn't want to create just another stock market trading company that sells classes. I've done that, and I don't think that's in the best interest of my apprentice. I want to walk him through the process of becoming a great trader, and you don't get there with information overload. You get there by doing it, by getting your hands dirty, by putting into practice. That's the only way to build a new skill.
I love how Jeremy teaches. I love the fact that he teaches things in such a real, practical way.
And he made me realize that I can do this.
I remember when I first started my trading journey, and let's just say I blew up at least 2 accounts.
I know this model of learning to trade works. I've had the opportunity to work with people from over 80 different countries.
And I was skeptical at first. I was kind of like, okay, are you sure about this?
I was always chasing stocks. I would always chase the next top thing and never had an opportunity to get any profit from it.
I've helped people with trading accounts that are just a few dollars, and I've helped people with trading accounts that are over $1 million.
These courses give me a much wider perspective on what is really possible.
And what Jeremy does so well is that he breaks it down in a simple form so it's easy to understand.
They're just regular folks, and if I can teach them, I can teach you.
I didn't want to let someone else tell me what the play was and I just follow their lead. I wanted to learn it for myself.
My greatest joy is when somebody that I have taught over the last decade, they reach out and they say something like, you won't believe it, but I actually have people that are asking me to teach them how to trade. Is that okay? You think I can teach them?
Working with you taught me that, stocks go through ups and downs pretty regularly and pretty predictable.
The portion that my husband has now been able to take over and own has outperformed the market and is doing better than the rest of our retirement. It is totally life-changing.
Just to think that I touched people, I taught them to do something, I influenced a generation of traders, and now they're taking it forward and they're influencing the next.
At the end of the trade, I ended up making 140%.
It just gives me so much delight and joy knowing that I can still do something with my financial future.
This is not something that's only for other people. I can actually become financially independent.
Not only allow me to make better trades, more lucrative trades, but have more confidence while I trade.
This Trade Maestro membership is excellent because it's got something for everyone. If you're just starting out, or even if you've been trading for a while, you'll find something you like. You need to get enrolled right now. It's affordable. It's comprehensive. And it's risk-free because you can cancel anytime if you decide you don't like it. So if you want to learn to trade the stock market, or if you're looking to take your trading to the next level, you need to get enrolled as a Trade Maestro member right now. The following presentation is for educational purposes only. All examples and analysis are intended for these purposes and should not be considered as specific investment or trading advice. All examples are for the purposes of teaching and are not intended to suggest future results. The risk of loss in trading securities, options, futures, forex, and cryptocurrencies can be substantial. Individuals must consider all relevant risk factors, including their own personal financial situation, before trading. Options, futures, and forex are considered more sophisticated investment vehicles due to high leverage and are not suitable for all investors. Well, good morning to all of you on the West Coast, and good afternoon to those of you on the East Coast. I'm Jeremy Whaley from Trade Maestro. It's great to be back with you today live for our third day in a row of starting our new live stream program. And we're here, at least for the foreseeable future, every day, Monday through Friday at noon. So it's great to have you, noon Central Time, which is where I live. So it's great to have you joining me today. And today we're going to be getting into a topic. I'm going to talk about the 5 disciplines of trade analysis. Yesterday we spent some time talking about the 3-step trading blueprint. And the previous day we talked about why it is that most people tend to lose money trading. And today we're going to go into the 5 disciplines of trade analysis. And I'm going to teach a little bit on that. And I know you're going to get some really great value out of that. So thanks for being here. And, if you don't mind, go over to the chat comment there, commentary, whatever you want to call it, the comments section. And let me know where you're coming from so I can kind of have an idea of where everybody's joining from. And maybe in the process, let me know where you're coming from. Why don't you tell me the number one thing that you're looking to learn and struggle that you're having with your trades, whether it's stocks, crypto, or whatever it is that you're working with. Before we get into our actual training section today, I want to do, like we're doing every day, I want to do some market analysis for us here. So you should be seeing my screen here. You're looking at the Dow Jones Industrial Average. And before we get there, if you just kind of take a look at the heat maps, you might be thinking, oh, it's a terrible, bloody red day. It's horrible. Well, it's not that bad. If we just take a look at the Dow Jones itself, I'm not sure if you can see these numbers. I was thinking yesterday, I need to figure out a way to really show all the indices in a big number. I don't have a good display for that, but 73. We're down 73 right now on the Dow Jones, down 300 on the NASDAQ, and right there in the middle, down 56 on the S&P 500. Now, you might be thinking that's a lot, but it's really not. When you think about being down 75 on a 40,000 point index, it amounts to less than 0.2%. So it's really not a big deal. I'm going to zoom in here. One thing that's got me slightly concerned, I said in the last couple of trading sessions or last couple of live sessions that what we're really looking at here, and what we're watching for, let me zoom back out, sorry. What we're really looking at is this consolidation pattern that we call a channel up here. And we're watching for this to rally back up to around 45,000. That's kind of the predominant pattern that is at work here. That's what we're looking for. But one of the alternative ways that this could play out, one way was that we could rally up to this pivot area and get stuck here. Well, we didn't do that. We rallied and we kept going. Another way is we could get kind of congested here in these moving averages, and that may be part of what we're seeing today. Where we could go from there's 2 different directions we could go. One is we come down and we test this pivot area right here and eventually continue the swing. And then the other way that this could go is we test that pivot area right there and it doesn't hold. And instead, we continue the bearish trend. And at that point, we would be breaking out of the consolidation and we would be continuing and actually getting into at least some sort of a bearish trend for the foreseeable future here. So that's where we are. Down, actually, it's moving more rapidly now, down 92, 91, 92, 93. Live markets, don't you love them? take a look at the S&P 500. If you can see here, this one actually has me, of the three, a little bit more concerned, not because of the amount of movement. It's down a little bit over 1%, but this candlestick formation is actually a bearish formation. It's what we call an evening star reversal. And I would rather see it after a much larger upswing than what we're seeing here. That would be a little bit more of a stronger indication. But this is enough to suggest that in the short term here, we're going to start selling. And just like I drew out for the Dow, the predominant probabilities here is that we would sell off to this pivot area. We would kind of bounce a little bit. And then we've got two choices. Do we bounce and take off, or do we drop through? Does that support not hold? So that one's got me a little bit more, eyes on for right now. It's been very choppy markets lately, as you guys know. If you've been following me very long, you certainly know. Really since November, but January, February, been a little bit choppy here. More difficult to trade. So that pattern right there, that 3-day candlestick pattern, that one's got me a little bit more cautious as of today. And then taking a look over here at the NASDAQ, it looks a little more bearish. I'm less concerned about it, just simply because it does tend to have a little bit more volatility with all the tech stocks in it. And so you'll see a little bit more movement in there sometimes, kind of freaks people out. You have a lot of the characteristics of that evening star reversal. Technically, it's not, but it's very, very similar. If you want to call it an evening star reversal, I'll go along with it. We are at that pivot area right there. So again, what we're watching for is, will it hold as a support? Will it really hold there? And if it will, then the forecast that I laid out Sunday night and the first couple of days this week will remain. If it doesn't hold the support, then maybe we're looking at more of a bear market, looking at some more bearish trends coming upon the short-term horizon. So that's where we are on the big picture as far as the Dow Jones Industrial Average, the S&P, and the NASDAQ. Doesn't, it's nothing overly ridiculous today. A lot of people respond, when they see the market's down 300 points, like, oh, there it is. There's a crash. It's happening. No, markets ebb and flow. That's part of the reason I do what I do. Part of the reason I teach the way I do is I want people to understand that markets are always moving up and down and sideways. And so it's really important to have a perspective of that. It's really important to keep that in perspective, because if you don't, what happens is you get so close to it and you see the movements of it and you start freaking out. You make bad trading decisions. And so what I always teach people to do, and I always encourage people to do, is zoom out, get a perspective of where we are in the big picture, and then we're going to fine tune our entries and our exits to really work within that trend. So if you got any questions about that, type it in here. If you don't, I'm going to move right along, and we're going to get into some teaching today. As I said in the opening, we're going to share and talk about an idea or a principle here that I call the 5 disciplines of trade analysis. And what I want you to understand about these 5 disciplines is, using these techniques, you can analyze any stock, any crypto, any future contract, any Forex pair. You can look at any trade you're considering, and in less than 5 minutes, you can truly do your analysis and know with confidence that your analysis is right and have a good idea of the next probable direction of the trade. You might notice that just in doing my market analysis, market overview, it took us about 5 minutes. And I looked at 3 indices, and I looked at everything that I need to see. Now, could I go deeper? I certainly could go deeper. Could I spread that out into a 30-minute analysis? Absolutely. But honestly, for what I need on a day-to-day basis, that's all I need to look at right there. And I do that stuff live so you guys get a perspective of it and you have an idea, and you can see how fast it really can be. So what I want to do here is I want to kind of walk you through these 5 steps. And I'm always going through these 5 steps all the time. I don't always call them out whenever I do them live, but I'm always thinking through, either consciously or unconsciously, these 5 steps or these 5 disciplines of trade analysis. And if you remember yesterday, we talked about the 3 steps in the blueprint to trading profitably. And I broke it down this way. I said the first step is you analyze the trade. That is, we're going to pick the direction. Step 2 is to apply the appropriate strategy. Step 3 is to manage your risk. Well, what we're doing today is we're going to go deeper into this analysis chunk here. This is where the money's made. It really is. I've been saying this for years. Some people still want to fight me on it and say that they need a better strategy. But if you'll learn to do number 1, number 2, and number 3 become really simple. Where everybody kind of likes to get stuck is looking for better strategy, or looking for, better ways to lower their risk, or they really don't look for better risk management. What they're looking for is they're just looking for ways to not have losing trades. And the way you find that is in doing better analysis. Analysis is the most important craft, if you will, or skill that you can develop in your trading. If you think about learning to ride a bicycle or learning to speak a foreign language or anything else that takes a skill, when you learn that skill, there's certain things in there that by unlocking the key skill, in riding a bike, for example, it's the key skill of balance. Once you learn to balance the bike, everything else becomes much simpler, right? In trading, that key skill is picking the trade direction. And the way you're going to get there is the skill of analysis, the discipline of analysis. Once we have analysis, coming back behind it and applying an appropriate strategy that works for it, applying the options trade, shorting the options or shorting the long stock or buying long, whatever it is. I said shorting the long stock, shorting the stock or buying long. Whatever your strategic application is, it becomes very simple. And the reason it's simple is because you know which direction the trade's going. If you're always questioning, though, it doesn't matter what your strategy is. It doesn't matter how great your strategy is. If you're constantly questioning, is the trade doing what I want it to do? Is it going the direction I think it should go? Then you're basically sabotaging yourself nonstop. And that's what I see a lot of traders doing. So what we want to do in this section, what we want to do in this teaching today is get into analysis. And as I said, I'm calling this the 5 disciplines of trade analysis because I literally go through all 5 of these with every trade setup that we ever do. If you've ever followed me on a Sunday night, in my live profit picks that we do every Sunday night, it's part of our membership at Trade Maestro. If you ever follow me in that, I go through literally, about 60, well, maybe not 60, but I go through a minimum about 15, 20 trade setups every week. And I do the market overview, do all this, and I go through them very, very fast. And then I do trade setups on them. But in doing it, there's never a single trade setup that I'm looking at that I don't consider all 5 of these disciplines. So that's why we're going to look at them today. Remember from yesterday, analysis has one outcome. Analysis has one outcome, and that is to determine the direction of the trade. The one reason that we use trade analysis, that we're focused on trade analysis, is to determine the direction of the trade, up, down, or sideways. The primary question that every trader is asking is, how do I pick a winning trade? How do I pick a winning stock? How do I pick a winning cryptocurrency, winning Forex, winning futures? How do I pick a winning trade? And the answer is, you don't pick winning stocks. You don't pick winning trades. They're all winners. All stocks are winners. All cryptos are winners. All futures can be winners. All Forex trades can be winners. What we want to do is identify the opportunity. We want to identify that this trade that I'm considering has the opportunity to break out and be explosive in a direction, whether that direction's up or whether that direction is down. And the way we're going to do that is through our analysis, and that's why I call this the 5, that's why we're focused on this, and it's what we call the 5 disciplines. So let's jump in. The first discipline, I introduced these to you yesterday, but the first discipline is support and resistance. Actually, I don't think I introduced these to you yesterday. I think it's the first time. So the first discipline is support and resistance. And what we're going to do with our support and resistance is we're going to identify the framework of the trade that we're considering. Identify the framework. You say, what does that mean? Well, here's what we're looking to do. We're looking to identify what price should the trade be trading at or should it not be trading at. If we can identify where the trade should go, the price, it should be up here, it should be down here, or it should not be here, then we have an idea, starting to get an idea of the boundaries of where the price should be. And so I refer to this as the grid or the matrix. In fact, I have it's about an hour and a half teaching on this called the market matrix, where I go into even more detail just on this aspect. Maybe I'll do part of that as part of the live stream series. But it's literally a grid. Once you see it, you can't unsee it. I've been doing this now for 25 plus years, since 1999. And, one of my big breakthroughs, I'll kind of share a personal story with you here. One of my big breakthroughs when I started trading well, a little later when I started to be successful in trading. It started off, I doubled my account really fast. I was all excited about that. Then I lost everything. And that took me out of the game for a while because I didn't have any money to refund the account. So what did I do next? I raised some more money and I started trading again, and I blew that out. And it took several iterations. I finally got some training in there, and I started to learn this discipline of support and resistance. And kind of the big one, the one that almost knocked me out for good. I had about $20,000 of my mother-in-law's money, and it doesn't matter how I got it. My wife shows up with it one day and says, "Here, go trade this." And so I started, by that point I'd learned a lot. It was a couple years into my trading career. And I knew this discipline of support and resistance. I didn't really know how to manage the trades yet, but I knew this discipline. And so I'd started trading, and long story short, I blew that entire $20,000 account out. I was devastated, and I just stopped trading for about 9 or 10 months completely. And one night after this event where I had blown everything out and I was devastated. I mean, I'd blown up at least, I think it was 3 or 4 accounts at that point. And this one was the biggest, and it wasn't my money. It was my mother-in-law's money. So I really felt terrible. And I was just like, I'm never going to be a trader. I suck. I stink. Can never do this. And one night I was in bed. I think we were watching like 24 or something. And for some reason, I decided to pull up my charts. And I was flabbergasted because these lines that I had drawn, the grid, the matrix, if you will, from literally months before. Remember, I said I hadn't traded for like 9 or 10 months. I hadn't even looked at the market. I'd walked away. And I pulled up these charts, and I looked at a couple of the charts. And I was like, oh my goodness. The stocks did exactly what I thought it was going to do. All the lines worked perfect. It was like there was a grid. It was like there was a matrix. And then I started getting really obsessed with it. And I realized that I had cracked part of the code, that there wasn't all this random activity happening in the market. It wasn't the prices were just constantly going up and constantly going down and it was all random, but rather there was a structure. And that was one of the biggest breakthroughs I had. It was a big breakthrough, number one, because I could see it, almost like Neo in the Matrix, which is why I call it the Matrix. But I also, there was a big confidence booster because after all those months, after all those dollars lost, after months of not trading, I came back and it was like I had the grid right in front of me. Now I had confidence. For the first time in my trades, I really had confidence to say, okay, I've got to be that far. I got to be this far away. And I really doubled down, started learning all the disciplines. And that's where this 5 disciplines of trade analysis actually came from. It came from that breakthrough because I knew support and resistance. I knew all these other things that I'm going to teach you today to some degree, but I didn't have it put together in a system. And I certainly hadn't combined it into a process like I have now. So that's why I say this is such an important principle. And, maybe it took too long to share that personal story, but if you'll learn this stuff, it will free you. At first, it becomes intimidating, but once you learn it, once you get over the hump of learning it, it becomes so freeing because you say, I know exactly what should and shouldn't be happening. Then when what shouldn't be happening happens, you stop and you say, okay, that shouldn't be happening. We'll go a different way. Or if it's doing what you think it should do, then you have confidence because you say, that's exactly what we anticipated it would do. I started this particular session today looking at our Dow Jones Industrial Average, right? I'll come back over here for us. I have a framework. That's what these lines are. These lines are the framework for where we think this trade should be going. I've already told you. This morning. Where we expect it to go is back up here. Why? Because it's the framework. It's the pattern. Now, what if it goes down? Well, then it's breaking the framework, and now that unlocks different codes in the matrix. It unlocks different things that could happen that now we say, okay, since that did not happen, now one of these becomes the most probable thing that could happen and that should happen in this next process, this next step. So that's why I say this matrix is so important and the steps are so important. So let's jump in. Let's look at it here. The second, actually, that was looking at it. I forgot. I didn't put examples in my slides this time. I was going to just come over and do them live. So what I want to show you inside the support and resistance in the matrix. As I zoom out on this Dow Jones Industrial Average, let me get rid of, I can't get rid of everything, but let me get rid of these averages. And you can see that every major turning point, I have a line. And it's almost like clockwork that the Dow is trading between these lines. I'll make it full screen for you. Can you see that? Now you might look at that and say, well, but what about right here? Well, look, it's not perfect. I'm not saying it's perfect. This is one of those where it should not be trading. So when it dropped below that price range, we say, okay, something else is going on. And then it came right back inside the price range. Right back. When it did that, all of our analysis reverts back to, okay, this is where it should be. This becomes simply an outlier. And outliers happen. It's part of what we should expect in the market. So don't be surprised when you have outliers. Now, I can go down any trade in our list. I can go down any trade in the market. Let's come over here to Apple. And what you're going to find is there's a grid. There's a matrix. In fact, I need to update some of these lines. In another session, I'll teach you exactly how to draw these lines. But as I start to draw them, put them in here, you can see it's like clockwork. We move between what we call pivot points, these pivots, these lines that we've got in the market. There's more up here I haven't got drawn yet. We move back and forth, and once you see them, we have a grid. And that grid becomes the framework. One of the metaphors that I use for this is it's like if you frame a house. You ever seen a house being built? You lay the foundation, next thing they come in, they put up all the studs and all the walls. Now, the house isn't built yet. But what happens whenever they put up all the wood studs and all the walls? They're framing in the house. You can start to walk in, and instead of just being this, ethereal idea that, this is going to be a bathroom over here. Well, we're starting to see structure. Starting to say, okay, there's a wall over here. There's a wall over there. This is how we start to frame a house. Now, you don't want to live in that house yet. It hasn't been built. But you can start to see the structure. And that's the importance of the matrix here. What you're seeing is you're seeing the structure of the trades coming together. All right, the second step in the 5 disciplines, keep calling them steps today, I don't know why. It's the second discipline, is the trend. And I talked about this yesterday. I said the trend is your friend. Actually, I think I talked about this on Monday. The trend is your friend. What the trend does is it identifies major momentum in the trade. And my rule is this: only trade with the trend. Don't fight the trend. Only trade with the trend. Now, if we could only trade with the trend, and if stocks would only trend up, and we could always buy low and always sell high whenever the trade's moving up, it would be easy, right? It would also be just as easy if we could trade with the trend when it's going down. You can short it. You can do other bearish strategies, make money when it's trading down. Trending stocks, trending crypto, trending anything is the easiest trade to place. That's why I say only trade with the trend. But where we start to second guess ourselves, where traders come in and they say, I don't know about this, is they say, I don't know how to identify the trend. How can I know that a stock is trending? How can I know that a crypto is ready to trend? And so then they revert to all the other bad habits that we talked about on Monday, where they're looking at the hype, they're looking at all the other analysts, they're looking at all the social media posts about it, and they're following the herd mentality. Something we haven't really talked about, that term herd, but the herd mentality is what you get when you're following hype, when you're following social media posts about it, but it doesn't necessarily mean it's right. So the question then becomes, how do we identify the trend? And there's several tools. It's one of the most common things that we've developed tools for in trading, but the easiest one that I have ever found is the moving averages. And I use moving averages religiously. Everything that we do with our trend analysis, we use moving averages. Now, there's other tools that are out there, but as you're going to see momentarily, the averages that I use make it unbelievably simple because we've created a method for making it red or green. And I'm going to share that with you right now. I think, if I can get over here. So what you're looking at right now is Apple. It doesn't matter what stock it is. I'm going to turn all the drawings off, okay? And instead, I'm going to turn on our moving average tool. Now, what the moving averages do is they average out the price of the trade. What we added to this with our custom average that we built for TradingView is we added this color so that you can see when it's bullish. When it's green, it's going up. When it's red, it's going down. Now, that's simple enough that anybody can do it. I mean, I can get my 12-year-old to do this, right? Just simply follow when it's red and when it's green. And we've done multiple, just ad nauseum back tests on this. There's a system, there's a trading system. I can't get into all of that today, but there's a trading system that goes with the moving averages. And just following the basic moving average system, you're going to double your market odds. You're going to go from a 33% probability of making money to about a 60% probability of making money just by following this indicator, just by buying when it's green and selling or getting out whenever it's red. And it's going to work across every stock. It's going to work across every crypto and really every time frame. There's some subtleties within different time frames. But even within, if you're a day trader, if you're a swing trader, these tools will work for it. In fact, it's so consistent that I could go in here, and I'm going to show this to you right now. I could go in here. I think I could. Come on, settings. Maybe I need to do it up here. What am I doing? Let's see. Well, I guess I can't go in here today because TradingView is not behaving for me. But I could come in here and I could turn my candlesticks off, and you could trade just following the moving averages. You could buy and sell just looking at the averages with absolutely zero price data. And you would still outperform the market as a whole over time. That's how powerful this tool is. And like I say, it doesn't matter which stock you put it on. This is Apple. Look, here it is on Lulu. You know, how did we know to get into all these bearish trades on Lulu? How do we know to get in these bullish trades and these bearish trades? You say, which ones? Well, I'll turn them on here. Oh, I took a bunch of these out of here. But for those of you who've been following me for a while, you know we took a ton of these bearish trades. I think we took six or eight during this bearish trend in here. Okay, and then we've been taking bullish trades in here. If you can't quite see them, I got trade setups in here. We took one here. We traded right to our target. How did I know this was the target? It's the grid. It's the matrix. We took bearish trades in here. There was one right here we took. We traded to our first target, almost got all the way to our second target. We're still working on that. Okay. How do we know to do that? It's the combination of the matrix that we get from the grid, and it's the combination of that with our trend. Those two steps alone, just pulling in your moving averages and your trends, and just pulling in your support and resistance will get you ahead of about 90% of traders. Those are the first two disciplines of trade analysis. Now, the third discipline is the discipline of chart patterns. What are chart patterns? You've heard them talked about. Chart patterns are little patterns of trading behavior. What do I mean by trading behavior? I'm talking about the people that are trading the stocks, the people that are trading the crypto that you're looking at. They're human beings. They have behavioral patterns in their trade activity. Okay? They do certain things over and over again. Human beings are unbelievably predictable creatures, right? So whenever people start to do certain things, it shows up in the price action of the stock or of the crypto or whatever it is that you're trading. It shows up. And it starts to show up in patterns. You say, why would we have patterns? It seems absurd. Because of herd behavior. I kind of mentioned herd behavior just a minute ago. Herd behavior is a collective societal behavior that starts to build. And without going into all the theory and all the science of it, what you need to understand is as the herd behavior starts to build, we get little patterns of human behavior. And those patterns are tradable. They show us what the herd is doing, and it allows us to anticipate future movements by telling us when the trend is ending, by telling us when a trend is continuing, or by telling us that things are going sideways. Now, there's only about 8 to 10 patterns that really matter. I've already talked about a couple of them today, If I come back over here to our Dow Jones Industrial Average, which I'm going to do right now, one of the things that I talked about at the very beginning here, I'm going to get rid of some of this stuff so we can see it. Get rid of our averages. I'm going to leave the lines in here because it will help identify the pattern for us. One of the things I talked about was this thing that we call a channel. A trading channel is a pattern. This happens to be a sideways pattern. Now, why is that advantageous to us? You might think, well, it's just going up and it's going down. It is. You're right. It's just going up and it's going down, which is why I'm not emotional about the market right now. If I were pulling out headlines today, which maybe I'll start doing that in some of these live streams to show you what the public is saying. The public freaks out about these moves, but a good trader does not get sucked in. A good trader doesn't buy into the news hype. A good trader doesn't buy into the headlines. They step back and they say, what's really going on? And every really good trader who knows what's going on in the market right now has zoomed out and has looked at this and said, oh, that's a channel. Why does that matter? Because the channel, the pattern tells us what the behavior is. The pattern tells us that the market is going sideways. And so when the market does what markets do in sideways markets, we're not surprised. But if we were thinking about this market as a trending market, if we thought it was a bear market because, it happened to be below the averages and the averages were red, if we were bought in, all in on the idea that it's a trending bearish market, then when it drops down below our support level and comes right back into the pattern, we're going to be shocked. Why did it do that? It was supposed to be a bearish trend. But if we recognize the pattern up front, and for those of you who may have been following me for a while, we've been talking about this now for weeks, many, many weeks. If you recognize the pattern, when it does the pattern, you're not surprised. This is one of, like I say, just a handful of many patterns. There's many patterns that happen all the time in the market. I'm going to kind of highlight a couple others for you here. In fact, I'm going to get rid of all of our drawings so I can show you some other patterns. And let's come into some stocks. Actually, let's do some on crypto. Let's look at Bitcoin, for example. Bitcoin's got patterns going on. There's a pattern that has been taking place up here at the top of Bitcoin. You say, oh, it's a channel. Actually, it's not quite a channel. It's related. It's a consolidation pattern. There's a pattern that's happening right now on Bitcoin that has just evolved over the last couple of weeks called a rising wedge. This tells us information about where the next direction of the trade should be going. I can look back at all sorts of patterns that have happened here on Bitcoin. I can show you patterns like this right here. This was a bullish flag pattern. Here's another variation of a bull flag pattern that told us that the trend was building strength. It was continuing in the direction of the trend. Let's look at a couple more. Let's look at XRP. A lot of people are big fans of XRP. I get people texting me all the time because XRP has a cult following like nothing else. It's crazy. People are looking at XRP and they're sending me messages saying, oh, how low is it going to go? When's this thing done? Why is it going down? Why is it freaking out? That's what they say. It's kind of extreme language they use. And of course, they always get mad at me because I get unemotional about it. There is a major support here at $2 on XRP by just putting that one line in there. That one line of the matrix that I just talked about a few minutes ago. Suddenly XRP doesn't look as scary because you say, oh, well, that's where it's supposed to be. That's the floor. Remember, here are my words that I'm using. Where it's supposed to be. When a trade goes within the matrix, it's where it's supposed to be. It's within the framework. It's within the boundaries. Now, if it drops below our support level here and it starts trading down, then we say, okay, that's not where it's supposed to be if it's in a bullish trade. So if it's in a good direction, we don't want it dropping below support. When it drops below support, we move into other steps of analysis because it's no longer doing what it was supposed to do. You see how that works? Now, if we look at the top, there's another line we can draw in here around $2.80, and then you have your all-time high that's up here around $3.40. Well, just looking at that now with two lines on there, you say, wait, that starts to look like I've got contained trading behavior, because we do. That's why I'm not freaked out about XRP. I'm looking at it and saying it's contained trading behavior. Now, what most traders are doing, because they don't know how to look at it, they've zoomed way in. And they just freak out when it starts to go down. They're like, oh my goodness, it went from $3.20 all the way down here to $2.40. Oh, it's crashing. It's a bear. No, it's not. You've got to zoom out and you got to see the patterns for what they are. Now, traders who don't necessarily have this discipline, they've kind of figured out some aspects of it. And what it's led to is it's led to philosophies like HODL, hold on for dear life. Because what some traders have figured out is if I overreact to the refined day-to-day movement, then I get burned. So they went the extreme opposite and they said, instead of trying to time my trade and get in and then get out, I'm just going to hold forever. And that's where this hold on for dear life HODL mentality came from. But that also is not a great idea. You see, it's two extremes. One extreme is I'm going to micromanage the trade. The other extreme is I'm going to just not manage it. I'm just going to buy it and hold it forever. And eventually I'll make money. Where the educated trader, the informed trader, is looking at this and saying, I'm within my boundaries. I'm not going to freak out as long as I'm within my boundaries. But what if I break below my boundaries? I'm out of this trade. I'm not going down with the ship. I'm not going to let this trade collapse everything I've got. And that's how educated traders avoid the emotional ups and downs of big trades such as XRP, where, we went from, what was it, 40 cents to $3.40. So it went up almost 10x in 2 months? And then when it comes back down, the emotional trader's freaking out, but the educated trader's not. Now, let me tell you what's going to happen with XRP, because I know a lot of you follow XRP. Actually, I think I do. Let me hear about it in the comments. Depends on where you came in here from. The uninformed trader bought XRP here and here. This may describe you. I don't know. I don't know where you bought XRP. My pen apparently does not like the live stream because it's really glitching on me here. The uninformed trader bought up here at the top because that's what uninformed traders do. They are hodling through this drawdown. They're hodling through the loss. They're holding on for dear life. And if XRP does drop below support and comes crumbling down, those same uninformed traders will be the ones who drive it all the way down as they sell in a panic. That's what's going to happen with XRP. On the other side of the uninformed trader are informed traders who bought here. The informed traders were buying early on. Anybody who's been following me for a long time knows we were setting this up. We've been talking about XRP for years. But we were telling people buying back here. And then when XRP runs up, the informed traders are the ones who are selling to the uninformed traders at the top. And in the future, if we drop below this pivot area here, this support level, and we drop back down to lower prices, the people that will be buying from the uninformed traders are the informed traders. The only difference between profitable traders and losing traders is, are you the informed trader or are you the uninformed? Are you buying the hype and selling the panic? Or are you buying when other people are saying, that sucker's been a dead dog for years? Are you buying when it looks scary? I'm not just saying be contrarian, because that doesn't work either. But are you buying when we get to the bottom and we have reasons to jump back in? Now you might be thinking, well, how would you know? How would you know to jump back in? Oh, I'm so glad you asked that. Because if I go back to what we talked about today, what? There's a matrix? There's a grid? What? There's moving averages that tell us that this trade was bullish back here in November, and that tell us that maybe we want to start taking some profits here in January and February? What? There's patterns? And what's going to happen at the end of the trend when it comes back to the bottom? Let me find one for you. Lulu. I'm talking about patterns right now. I'm talking about a lot of it, but I'm talking about patterns, getting rid of all of this on Lulu. In addition to, there's a matrix of support and resistance grid. In addition to, there's a moving average that's telling us bearish versus green is bullish. In addition to those things, when Lulu got down here to its final support level, it put in a pattern right there. That red line that I drew in there. It's a chart pattern that I teach. And what this pattern is it's a terminal pattern that tells us the preceding trend is done and it's reversing. It's a reversal formation. It tells us that all that sentiment that was driving this trade down, that caused Lulu to go from $500 a share down 50% to $240 a share, now all that sentiment is done, and now everything is reversing. And people who were with me back in August know, because I was doing this live in our profit picks, they know that as I was going through all these steps of analysis, we identified it. Hey, we're down here at some bottom. We're down at some support levels. We're starting to see some turns. Our moving averages were turning, but we started talking about the setup back here during the transition. And you can see on the chart, I still have some of the old trade setups in here where we started entering this trade way early in the trend because we've been trained to be informed. Now, you're not going to be informed following hype. You're going to be informed doing the right analysis. That wasn't the only piece of this puzzle that told us this trade was reversing. Let's go to the fourth discipline. The fourth discipline of trade analysis are your candlestick formations. What are candlestick patterns? Candlestick patterns are very much like chart patterns, except for it's fine-tuned trading behavior. It's refined. It's day-to-day. And the signals, what they're telling us is not that a trend is reversing. They're telling us that a swing is reversing. We're moving from a bullish swing to a bearish swing. It's a much smaller time frame. The beautiful thing about candlesticks is it gives us instant feedback of the trader sentiment. And it tells us how the traders feel about that individual trade that we're looking at, that we're working with. So let me show you. I'll come back over here and I'll show you what we're looking at. In this reversal of Lulu, at the very, very bottom down here. And again, I'm going to keep turning stuff on and off so that we can kind of clean it up. You know, it looks busy. It's not really that busy, but it looks like it is. Some of these candlestick formations like this one told us that it was going down. Some of us, like this one right here, told us that it was done. This is what we call a bullish counterattack. Came against it, and that ends the preceding move. Now, we didn't know the trend was reversing yet, but we knew that that swing was done. We get up here to the top. These little candles warned us that we were going to swing back to the bottom. And then here's a 3-day pattern that you may have heard me talk about today. I talked about an evening star reversal. This is a morning star reversal. And what it tells us is that swing is moving the other direction. So if you start to stack this up, we have our grid. We have our moving averages. We have our chart patterns. And now we have our candlestick patterns in refined, I should say, turning points, indicating that the shift is happening. The moves are coming. It's the fourth discipline of trade analysis. And then the fifth one that I'm going to go through here, candlesticks are number 4. The fifth discipline are your indicators. Now, indicators are a lot like strategy. It's kind of like crack to people. People just love indicators. Love, love, love them. Always want another indicator. Indicators do not drive the trade. They're not the most important piece of analysis. There's two functions that indicators serve. Function number one is they serve to confirm what we already knew. They serve to confirm what our matrix told us, what the grid told us. They serve to confirm the trend analysis or what the chart patterns or the candlestick patterns told us. Or the second function that indicators serve is to alert us to something that we did not see. It's the only two functions of indicators. Confirm what we already knew or alert us to something we did not see. And the reason we use them is they give us more confidence in our analysis. It's that simple. So let me liken our indicators to the gauges in your car. The gauges in your car, for the most part, confirm what you already knew. They don't drive your car. Your gas gauge doesn't drive your car. Your temperature gauge doesn't drive your car. Your speedometer doesn't drive your car. All it does is tells you feedback that you pretty much already knew. If you're driving down the highway and you're roughly going about, 75 miles an hour, and you look at your speedometer and it says you're going 74 miles an hour, it's like, yeah, it's about what I felt like I was doing. Your speedometer doesn't drive the car. It just gives you a measurement of what's going on. Your gas gauge, you're driving along, you feel like, I got a lot of gas. You look down and it says you got 3/4 of a tank. You're like, yeah, I'm fine. It's just confirming what you already knew. But every once in a while, you might look down and you see that your gas gauge says, I'm sitting on empty. You might think to yourself, oh, this is a problem. It's alerting you to something you did not realize. Still doesn't drive the car. You can drive all the way across the country from Los Angeles to New York without a gas gauge. It's easy. But you don't have anything to alert you that you're running out of gas. You have to find other ways. You can measure your mileage. There's all sorts of things you could do to know how much gas you have. But your gauge is the easiest way to get the alert. Now, some indications in your car are really, really urgent. And some are just pending urgency. If your gas gauge says that it's an E, is that urgent? It's important. It's very important. If you don't pull over and get gas, you're going to run out of gas, then it'll be a crisis, right? But it's not a crisis yet. And so when you see that your gas gauge is getting low, what do? You find the next exit, you pull over, you find a gas station, and you pump up with gas, and you go on your journey. It's not a big deal. But there's some indications you get from your gas gauge, and you say, or from your vehicle, and you say, this is a crisis. And you pull over immediately. For example, your temperature gauge, your thermostat. If you're driving down the road and you look down and you notice that the thermostat is pegging hot, that's a pull over immediately. Your car's overheating. You cannot even make it to the next exit. It's a crisis. When we look at our indicators function the same way. They confirm what we already knew, or they alert us to something we did not see. Just like the gauges in your car. So let's come over here to our Lulu trade. And if you're just looking at Lulu, and we're just looking at this trend reversal, you pretty much have a pretty good idea that the trade, let's come over here to when we were right here. Okay? How did we know that Lulu was reversing from a bearish trend to a bullish trend so that we could be a more informed trader? Well, our moving averages started to indicate it because we were starting to, trade back above our averages. We saw them reversing. We were bouncing up off of the grid, bouncing up off of our support level here. We had some chart patterns coming in and some candle patterns coming in, but there's another one that was happening. And I'm going to get rid of all this so we can really show you and you can see it. I'm going to bring up a couple of indicators here. And you're going to notice that this one right here, it's called a stochastic. It was very, very low. We call the term for that is oversold. And as we got to our support level, it made a reversal. And it said, I'm done. I'm done falling. This was a warning. Get out of any bearish trades and start preparing for a reversal. We had a similar indication on this one right here. It's a custom indicator we created called the JMAC. A similar indication telling us a similar story. Now, you might look back at some of these indications, and particularly this stochastic, and you might think, well, at the beginning of the trend, it went really low and it stayed there. And you would be correct, because there's context to indicators. One of the keys to reading the data is knowing the context of the trend. I don't have time to get into that. What I want to show you is that our indicators were confirming other signals that we were getting. And when you look at the reversal of the trade, and when you stack the weight of the evidence, I've got my grid in place. I've got my averages in place. I'm starting to see patterns of reversal. I'm seeing candlestick formations of reversal. I've got indicators of reversal. What you're seeing is a stacking of the 5 disciplines. And it's moving the weight of the evidence over from this is a bullish trade, this was a bearish trade in this case, to this trade is terminating, and eventually it turns into this trade is now bullish. And that's how we anticipate the direction of the trade. That's how you move from being an uninformed trader who's constantly on the wrong side of the trade to becoming an informed trader who's getting in and recognizing the shift and identifying the right time to get in. These 5 disciplines, when you know these 5 disciplines, you can look at any trade and you can know within just a few minutes if it's a good trade to take or if it's not. Now, I spread this out. I mean, I've been teaching now for 45 minutes or 40 minutes, a little longer than I meant to go, but I spread this out because I'm teaching it. When I actually do a trade analysis, I go boom, 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 boom. And I'm so boom, boom, boom that many of the disciplines I don't even talk about. I just quickly glance at them. My unconscious mind is checking it off in my brain. And it's like, oh yeah, that's happening. Boom, boom, boom. Here's the setup. Let's go. And I can do that. I can pretty much analyze any trade in less than 5 minutes. It's about 2 minutes, honestly. I can just go boom, boom, boom. And what that allows you to do is now at any time frame, you can do the same analysis. So if you're a day trader using the same 5 disciplines of trade analysis, you can know your structure, you can know your patterns, you can know your trend, you can know your candlesticks, and you can apply your indicators, boom, 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 boom. And even on a 1 minute or a 5 minute chart, you can get that new technical information, that new data, make your trading decision and execute it and have more confidence in making the trade that you're actually picking a trade that's going in a good direction. The 5 disciplines of trade analysis. If you learn these 5 disciplines and you master them, the simplicity with which now you can pick the probable direction of the trade, it's incredible. And then once you know the direction, well, how much peace of mind do you have? It's easy to apply a winning strategy now. It's easy to do the risk management. That's just a formula. This is the hardest part right here. And I just gave you the structure and the 5 disciplines. Now, if you want to learn more, a lot of what I just shared with you, most of what I just shared with you, we worked through in our Pick Winning Stocks Challenge. And I've been talking about this for the last 2 days. We're going to start this on Monday. I'm going to be teaching it here live. I'm going to go through a session every day, just like I did today. We'll do a market update. We'll do a market analysis. And then I'm going to do a core trading session. This is included normally in our Maestro membership over at trademaestro.com. It's a course that we've sold for $500. Like I say, it's premium content. It's part of our membership. But for one time only. I'm going to be teaching it live. I'll be doing it right here on this YouTube channel. I'm going to be simulcasting over to Facebook, and we may even have Rumble going by next week as well. We're going to start on Monday, March 31st, so you will be done by this by April 20th. We're going to be going 5 days a week, Monday through Friday. We'll be going live. You have to be here in person. I will not be sending out the recordings for you. If you want the recordings, you can get them as part of the Trade Maestro membership. But if you want to watch it live, you want to experience it, we're going to be starting it on Monday. So mark your calendars. If you haven't liked and subscribed to the channel, then by golly, get over here and like and subscribe to the channel. Turn on the notifications so you know when we go live. Also, sign up for our members or for our mailing list over at trademaestro.com so you can get the emails, because I do email out. Let me put this up here. I do email out the alerts that we're going live. So that's another way that you can be alerted and be informed when we're doing this. And that's what I got for you today. So take it in, learn it, digest it, process it. These live streams are up on the channel. You can go back and watch these and review these if you need to. And tomorrow we're going to open it up and go a little bit deeper. In fact, I may go more on the crypto side tomorrow. I haven't quite decided, but the principles are all the same. And that's one of the things I want you to learn is when you do your trade analysis, if you're doing it for stocks, crypto, futures, Forex, whatever you're doing it for, it applies the same across every market. There are some subtleties within the markets, but 98, 99% of what you're doing is the same across every market. It's incredible. And once you learn it, you've learned it. Once you've learned it, you've learned it. All right, folks, thanks for being here. If you got any questions, type them into the comments there, type them into the chat, and I will see you guys tomorrow. Thanks again for being here. If you haven't liked and subscribed, then do so. Kind of foolish not to at this point. And I'll see you guys tomorrow as we come back. Until then, happy trading. I wish you all the best, and we'll talk to you soon.